The stock trades for just 35 cents. This makes it not only the cheapest stock I've ever recommended, but the first penny stock we've ever issued a buy alert for in the Insider Report. This is a micro-cap biopharmaceutical company developing novel, sustained-release injectable therapies. Now, as I mentioned, the stock is just 35 cents, and I believe it could easily move up several 100% in the coming weeks. When you look at the chart, you'll quickly see the stock is already up around 300% since just the end of June. Now, there's two really exciting things about this stock. The first is the huge surge in volume, and second is where that volume is coming from. So let's take a look at the chart. Now, as you can see, the stock, as I mentioned, has had a huge surge over the last 5 weeks, running from around 8 cents to its current price at around 35. But more importantly is the volume. You see these bars right here across the bottom side of the chart? That shows the volume. The higher those are, the more volume is trading. So when you look up in the top left corner, do you see that vol 1.82 mil? That's how many shares traded yesterday. Before that, we had 700,000. 1.1 million, 500,000, etc. Well, let me back this chart up and show you what you're comparing that to. Look at the previous days for the last couple of years. Those volume numbers, 3,000 a day, 48,000 a day, 16,000 a day. So it's very easy to see, and I'll stretch back, let me remove these earnings from the chart. I'll stretch back several years and take a look at how big that volume spike is compared to anything we've seen from the last several years. Now, this stock looks like a dog at first glance. I mean, it went from $2 down to 8 cents. It's not something you generally want to invest in, but I think it's on the early stages of a big turnaround. Now, as I mentioned, it's not just the amount of volume, but where that volume is coming from. And thanks to proprietary software developed through years of following insiders, I've tracked down the insider trading activity to see where this comes from, and it's actually quite interesting. Now, this insider is not a person like I usually find. We're usually watching the CEO and the CFO and the board of directors, but what a lot of people don't realize is anyone who owns 10% or more of a publicly traded company also meets the SEC definition of an insider. That's because once you own 10%, you've got a large voting block on that stock, and it's very easy for these people to not only give themselves positions on the board of directors, but they also have sway with the company, and they become privy to that material, non-public information that makes such a huge difference in small stocks like this. Now, this company received a private placement investment of $45 million last July, so July 2019, from a South Korean healthcare company. This is a much larger company, about 100 times the size of this one. And private placements are done when a company wants to invest in a smaller company, but they don't want to do it on the open market. You can't go out there and buy 90 million shares of the stock without moving the price. They go to the company directly and say, hey, we'd like to invest this much money with you. Will you sell us X percentage of your company for X number of dollars? And that's what happened. But here's the interesting thing. Based on my calculations, the South Korean firm currently owns around 32% of the outstanding stock of this company. But 3 weeks ago, they started buying more and started buying it on the open market. Take a look at these trades. So this large healthcare conglomerate has currently made 11 purchases just since July 13th in large chunks. We're talking 250,000 shares, 500,000 shares at a time. And it seems they're buying with no regard to price. They began buying at around 12 cents a share. They bought at 19 cents, at 25 cents, at 33 cents, at 34 cents. And this not only substantial but sustained buying from this insider should continue to level up this stock as that buying pressure, that buying volume takes out the ask offers up there and pushes this stock level by level higher, and is likely to continue to do so unless they stop buying. So why would they be buying? Why is a company who previously did a private placement deal now out there on the open market picking up shares? Here's what's likely going on. This company, who owns 33% of the outstanding shares, likely wants to own the whole thing. And there's a very good chance they made a tender offer to the stock to acquire it all, which got rejected. So this could very well be what's known as a hostile takeover. That's where an outside entity, or insider in this case, begins buying up enough stock in the open market until they have controlling interest. Because once you own 51% of a company, it's yours. You can't be outvoted. You can scrap it, you can absorb it into your own, you can do anything you want, but until you own that 51% or have voting power of 51%, it's not in your control. So if they're out there obviously buying this stock up and building their position to a level that would give them that controlling interest, is either going to do one of two things. Either they'll just keep buying until they own 51% of it and absorb it, or This is a way to get our smaller company back to the negotiating table. And they're seeing these trades and they're seeing the Form 4s. They're going, all right, we're going to keep buying until we own the thing, or you can just sell it to us, make a nice chunk on your shares, and we'll all leave happy. And that's what I think is going on. So my suspicion would be that we see a buyout of this penny stock, of this 34-cent stock, at a price obviously much higher than it's trading now. They always get bought out at a premium. I think on the low side, they're going to pay 30, 40, 50% above market. And if they keep buying and keep pushing this price up, as we see how high it's come up in just the last 5 weeks, we could easily be in the $1, $2, $3 range in the next few months, giving investors the chance to 10x their money on this stock in a very short amount of time. Now, there's obviously a lot more to this, and I want to cover it all. We don't have time on this video. However, I do have an on-demand training webinar. You can view it by clicking the link below this video. Do that right now. And in this on-demand training, I'm going to share with you not only the details on this stock, including the ticker symbol, what the insider is buying, all the technicals, all the data, everything you need to know to make an informed decision, but I'm also going to share with you our entire insider trading methodology. I've been doing this for a lot of years. I've been on Fox and CNBC and Bloomberg and a lot of other networks as their go-to authority on insider trading volume. I've made it my life's work to study these types of trades, and I want to share with you how I do it and help you do the same thing, including how to find this information, how to locate the best trades, which signals are the highest likelihood to turn you a profit, meaning insider cluster buys and first-time buyers, perfect track record insiders, all that. And even more importantly, are the stocks you want to avoid. You know, a lot of people use sites like Insider Monkey and things like that, which just dump these insider trades, but they don't know what they're looking at. They don't realize it's not really an insider buy, it's an insider cashing out his option position. Or, yes, the CFO just bought $100,000 worth of stock, but guess what? He did the same thing last month and the month before and every month for the last 18 months, meaning this thing is not substantial. So you really need to know how to not only find insider trades, but get the whole picture in order to find those huge opportunities like we hand our insider report members, where you have the chance to make 100, 200, 500. We've had gains as high as 1,091% in just a couple of months by using this information. I want to show you how to do the same thing. So go ahead and click that link below right now. Watch the on-demand training video. I promise it'll be worth your time, and you may never look at picking stocks the same way again.